Have you ever wondered how people turn a small investment into a large sum in the real estate market? What if you don't have hundreds of thousands of dollars on hand? Not a problem. We can still take the advantage of the real estate market growth by investing in the 3 best REITs. In this video, we will introduce these outstanding REITs that are easily accessible by everyday individuals. We will also analyze the business they are in and outlooks for the next few decades. In the end, we will build a portfolio that has the potential to grow your $10,000 investment into over $600,000. Before diving into real estate investment trusts, or REITs, let's figure out why we need to invest in REITs. Over the past few decades, the real estate market has seen substantial growth. As individual investors, it can be challenging for us to own physical properties for earning passive income. By investing in REITs, we can receive dividends every month or every quarter, providing a reliable income stream. When in economic downturns, passive income becomes our safety net for all unexpected situations, such as job loss. Most of the time, the stock market is going up, but it is not always the case. In the year 2000, the S&P 500 index was about 1,400. How about 10 years later? It was about 1,100. This 10 years is called the lost decade. History may repeat itself, but no one knows when that is going to happen. With REITs, we can supplement our incomes in tough times and reinvest dividends when we are in the better situations, enhancing our financial stability and growth. Number 3, we have East Group Properties, ticker symbol EGP. This company specializes in developing, acquiring, and operating industrial facilities across 12 southern states. East Group serves a wide range of customers, including logistic providers, manufacturers, and e-commerce businesses. Their properties are typically located in the Sunbelt markets, where there is strong demand for industrial spaces due to economic growth. Currently, East Group owns 510 industrial properties in these states. In the first quarter of 2024, East Group began to construct 2 new facilities, one in San Antonio and the other one in Tampa. The company also acquired 2 pieces of land in Las Vegas and Atlanta recently. As we can see, the demand for industrial facilities is high, and the company is expanding. Financially, East Group did very well over the years. The company is having positive growth in revenue every year, even during the pandemic. In 2019, the revenue was only $331 million, but it jumped up to $566 million in 2023. The net income is $121 million in 2019 and $201 million in 2023. This is almost double in 4 years. Net income is the revenue minus all costs and expenses, so we can see East Group did very well in reducing costs and maximizing profit. With all these good results, the company generously rewards stockholders. The current dividend yield is 2.77%, backed by the strong dividend growth of 8.93% per year. Impressively, the stock price appreciation is 11.05% per year in the last 10 years. For a $10,000 investment, your portfolio would be $31,498, and the annual dividend is $719 after 10 years. After 20 years, this investment would grow to $108,138. Now the annual dividend is $1,994. In 30 years, the investment would be $358,318, and the annual dividend is $5,332. If you guys like this content and find it helpful, please hit the thumbs up button and subscribe to the channel. Thank you so much. Now, let's move to the second REIT. Number 2, we have Redford Industrial Realty, ticker symbol REXR. Redford manages industrial properties concentrating in Southern California. Their properties often include warehouses, distribution centers, and manufacturing facilities. These are high-quality industrial spaces to meet the specific requirement for the tenants. As investors, we are looking for long-term profitable businesses. Redford is one of them. The reason behind it is that Southern California is an economic powerhouse, so the infrastructure and logistics have to meet the demand from the industrial growth. The GDP in the region is about $3.89 trillion. It would rank 5th in the world if Southern California is a country. By looking at the location of these warehouses, they are all strategically located along the coastline, providing tenants the convenience of efficiently moving goods. Another good thing is that the occupancy rate is 96%, ensuring consistent monthly rental income and positive cash flow for investors. Southern California's economy is expected to have steady growth in the future, supported by its diverse economic base and strategic locations. Financially, Redford did very well in the past years. Back in 2019, the revenue was $267 million per year. It went up to $798 million in 2023. The growth is pretty amazing. That's only part of the picture. How about the profit? Yes, it has been going very well. The net income was $62 million in 2019, but it grew to $238 million in 2023. This is almost 4 times in growth. This demonstrates the company's ability to manage the business in a highly cost-effective manner. All the great performances are rewarding stockholders. The current dividend yield is 3.34%, very modest. But the dividend growth rate is very high, at 13.49% per year in the past 10 years. Also, the share price appreciation is at an amazing rate of 13.64% per year. If you invest $10,000, your investment would be $40,958, and the annual dividend is $1,350 in 10 years. In 20 years, this investment would grow to $195,419 with the annual dividend of $6,343. In 30 years, the investment would be $928,503, and the annual dividend is $29,691. Number 1. Let's see the last REIT, Equinix Inc., ticker symbol EQIX. Equinix is a leading data center provider that offers services to over 10,000 clients on 5 continents. What is a data center? It is a physical location that has IT infrastructures like servers, data storage drives, and network equipment. These infrastructures can support power supplies, replicate data for disaster recovery, and protect against data leaks. In recent years, due to the expansion of cloud computing, AI, autonomous vehicles, and virtual reality, the demand for data centers is increasing. Back in 2014, Equinix only had 100 data centers, but now it has 260, a 2.6 times increase in just 10 years. Therefore, the data center business is a rapidly growing industry with a bright future. Financially, Equinix did an excellent job over the years. The revenue was only $5.16 billion in 2019. It went up to $6.72 billion in 2023. How about net income? It went from $508 million in 2019 to $969 million in 2023. This is almost double in profit, so we can see the company did a good job in managing the cost. The free cash flow can also attest to that. It was only $23.68 per share in 2019, but it went up to $34.36 per share in 2023. It shows the company is financially healthy and has sufficient cash on hand. These are very impressive performances for data center REITs. The current dividend yield is 2.12%, but the dividend growth rate is 11.30% per year in the last 5 years. The company rewards shareholders very well. The share price appreciation is 15.24% per year in the past 10 years. If you invest $10,000, your investment would be $41,257, and the annual dividend is $609 in 10 years. In 20 years, this investment would grow to $189,681. Now the annual dividend is $1,874. In 30 years, the investment would be $841,812, and the annual dividend is $5,563. Should we invest all our money into Equinix? The answer is no. Like any investment out there, investing in one REIT is also risky. We want to minimize the risk, so diversifying the investment is necessary. Create a portfolio including the 3 REITs we discussed above and see how well this portfolio performs. In this case, we want to invest our fund equally into 3 REITs, so we will take the average of each metric. Now the average dividend yield is 2.74%. The average dividend growth rate is 11.24% per year, and the average share price appreciation is 13.31% per year. In 10 years, the investment would become $37,542 with an annual dividend of $852. In 20 years, this investment would grow to $156,965, and the annual dividend is $2,890. After 30 years, this investment would be $634,403. Now the annual dividend is $9,477. Investing in REITs is a great way to grow our wealth from the real estate market without big initial investment. The key is to pick some good REITs and hold on to them for a long time. Thanks for watching. Be sure to hit the like and subscribe button for more helpful tips like this. See you in the next video.